You've done the hard work and you've saved up $1 million in your overall retirement portfolio. Can you live on just the interest? Can you afford to live on just the interest in retirement? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Cohorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. A lot of us are still saving and working towards this milestone of being a millionaire, right? Millionaire, typically you're going to include all of your assets, so your full net worth, right? That's what a millionaire, that's how you determine that. All of your assets, it's cash and property and all that minus everything you owe. And does that equal $1 million? The more so, people are thinking, I'd like to have $1 million saved up in my portfolio. And then there's this question, well, is that even enough anymore? How far will that go given how, everything is more expensive, people are living longer and so on? Is that still the right milestone? Well, that's why I would argue you need a 5-factor retirement plan, because for most people, when you're looking at your finances or the ability to retire, walk away from that paycheck, so much emphasis is on how much money do you have saved? How much money do you have saved? That's wildly important. You can't get there without having the awareness of how much money do you need saved up. But that's not the end-all be-all. It's not the only factor. There are 5 factors that determine whether you're able to step away from that paycheck and confidently retire, and how much you have saved up in your investment portfolio is just one of those 5 factors. The other 5 factors, I'm just going to share them with you real quick, is what age do you want to be done? When do you want to retire, okay? The other part of age is what's your life expectancy. So basically, how long is retirement going to last? Because if you think, well, it's just $1 million, I've got to save up $1 million. One of my classic examples, and I went through this early in my career, is so instructive, and I've shared it before on this channel, is a newer individual, newer client early in my career came and was fixated and said, yes, I've done the math. He was an engineer, so very smart, smarter than me. Did all the math, and yes, I can retire when I have $1 million saved up, and he achieved that when he just turned 54. And I actually ran the numbers. We ran the numbers using our, more, let's say, comprehensive approach. And it was, this is too risky. I wouldn't retire. And he chose to and went back to work 4 years later because he spent more, circumstances didn't pan out the way he expected. And so therefore, $1 million or whatever you have saved up, how long does it need to last? So age is the first factor. That's the other part that contributed to that story, is spending. How much are you going to be spending? What's your retirement lifestyle is the second factor. And you've got to include health insurance, which is something that he wasn't really accounting for. Taxes, which is something that he wasn't accounting for accurately. Inflation. So all sorts of things, right? You've got to figure out what is your retirement lifestyle. What's that spending number? Third, what are your income sources? He also, or overestimated what he'd be able to earn in a part-time job or elsewhere. So how much will you be earning? That fourth factor is how much do you have saved up and how much are you saving? And then the fifth factor is how much investment risk are you comfortable with? And that one really pertains to what's the future growth potential and volatility of this portfolio. So it's all 5 of those factors that determine, are you on path? Are you on track to retire? That, to me, I don't know. There's lots of online calculators. There's sustainable withdrawal rate, which we're going to talk about here in just a second, but none of those are an equal substitute for going through a 5-factor retirement plan. Listen, this is the biggest financial decision you're going to make in your life. You only want to retire once. You want to make sure that it's a thorough and comprehensive analysis to ensure that you're doing the right things and you're ready to be done. Before you make that decision, you need that 5-factor retirement plan. All right, so that was a tangent. Let me backpedal here and go back to the question. You've done the hard work and you've saved up $1 million. But the hope is, in your mind, you're thinking in this scenario, I don't want to spend through that. I don't want to spend through it. Can I just live off of the interest? And how much would that be? I've done a couple of videos on this before, because a different way of thinking about it is, okay, well, $1 million, that's me withdrawing 50 grand out of that for 20 years and I'm good. That $1 million is spent through. But I've been able to draw $50,000 out, and that's a good amount or whatever in your thinking. That's if it earns no money, but it also assumes no inflation, meaning 50 grand in your first year of withdrawing is the same as 50 grand 20 years later or 19 years later. And we know it's not. We know that there's inflation eroding that. And we also would expect that $1 million would be earning some interest or something along those 20 years. So just doing that math doesn't really work. But if the thought is, no, I'd like to preserve my principal. I'd like that $1 million to still be there because I might have some nursing home expenses or some elevated expenses out there in the future, or ideally I leave this as an inheritance to the kids. So therefore, how much could I draw off in interest, and is that enough for me to live on? I wouldn't. So let's answer that question, then I'll tell you sort of the 3 obstacles that you'll need to overcome if you're going to take this approach, which is a fantastic approach to take working with your CFP. But I wouldn't base it on today's interest rates, because even though I do expect, and no one knows the future, I certainly don't, but I would expect inflation will stay above that 2% target for a longer period of time than what the Fed really thought and hoped and expected. Therefore, I think interest rates will stay a little bit higher for longer. I don't think you can plan on a 5% interest rate throughout retirement, and therefore you'll be able to draw 5% interest off of your $1 million and you'll be fine. I don't think that's appropriate. Instead, I would look more to the 3.5%, 2.5% level as the right level of interest. In a couple of ways I would get to that. Number one, if you look at intermediate term bond interest rates, longer term, right? Or not longer term, but further down, the yield curve, we're in that 3%, 4% range, and I would sort of err a little bit more conservative. So 3.5. That I think is more sustainable. That's what the bond market is saying is likely interest rates over the long term, despite what the Fed's doing in the short term. So that's one. Second thing is when you look at dividend yield for the overall stock market, 2%-ish, 2 to 3%. I think that's fair, and I don't know if your $1 million is going to be invested in dividend stocks or whatnot, but I think that's an appropriate level to look at. And then the other, which isn't, I mentioned it earlier, it's not essential for this question of how much interest can I draw off my $1 million, but a sustainable withdrawal rate. There's been tons of math applied to that to answer that question, and 3 to 4% is the sustainable withdrawal rate. So to me, I think 3% on $1 million, 3% on $1 million, that's 30 grand for the year. That's $2,500 a month. That's the interest. Can you live on that coming off of your portfolio given the other 5 factors? Okay, that's the question. If it's 3.5%, then you're just under 3 grand a month is what you'd be able to draw out. Does that fit? I guess that's the question, and that's why it's more than just, well, I've got $1 million saved up. Does this work? You've got to then compare that to the other 5 factors. So if that's how much you're drawing from your portfolio, what are your other income sources? What are your spending? How long is retirement going to be? How much risk are you comfortable taking? Those are the 5 factors. All right. If this is your scenario, or if it's something you'd like to do personally, I would love to. You know, and I've got, obviously you can tell, a couple decades before I'm hoping to retire. And the hope would be that I've structured things in through those 5 factors to be able to live off of the interest and not have to invade principal. Most people cannot do that right now these days because interest rates aren't as high. People haven't saved up as much. The lifestyle is, everything costs more, and so it's more challenging. What are the obstacles that stand in your way, that will stand in your way to just living off of the interest that this would provide on this $1 million portfolio? The first, as I sort of already mentioned in that base case example from many years ago that really wasn't even intending to share in this video, that number one is taxes. This individual, when he broke it down, he said, okay, $1 million, and if it earns 6%, that was the thought, then I'll have 60 grand a year of income. Well, when I did the math before he retired, did the math on that 60 grand of income plus the other little income that he had, he was going to do a little bit of side stuff and whatever. Taxes, he didn't account for taxes at all. And well, it's not going to be much, but he was 54. And therefore, we structured things in such a way. And so I guess here's the point. That entire $1 million was in his 401k, pre-tax 401k, that then transition to an IRA. But either way, as you draw that 60 grand out, it's taxable. It's taxable at earned income, ordinary income tax rates. And therefore, it's not 60 grand that you get to spend. it's something closer to 50 grand maybe, or depending on your tax situation. And so therefore, oftentimes people look and say, well, I can earn this interest rate on my portfolio. Yeah, I can live on that. Yeah, you've got to factor in the taxes. The antidote to that is having some tax diversification, which this individual we talked about up front, he wasn't really interested in, but having some tax diversification. And that is having, when it makes sense in your overall financial life, to be saving pre-tax. But in times when, you know what, I still like pre-tax, but this situation might be better for a Roth, funding the Roth, having some diversification so that when you get out there to retirement, you can be more objective about, well, what's my scenario right now? Should I draw money from my pre-tax accounts and have it be taxable? Or should I draw money from my Roth accounts and have it be after tax or tax-free? What's the right ratio given your situation? And so being aware that out there in retirement, taxes will be part of your overall spending, will erode your purchasing power from your portfolio. Being aware of that up front and planning for that down the road can help you overcome this obstacle. The second obstacle to just living off of the interest on this $1 million, 3%, $2,500 a month is what's your lifestyle? What are your expenses? And I'm not talking about, do you buy your coffee, do you make it at home, or do you go out for coffee? I'm not, obviously all of those lifestyle choices matter, but what I mean more so is, how much is health insurance? How much is your health insurance? Do you still have debt, right? So some of those sorts of questions all take your base lifestyle, your choice. We like to go out to eat twice a week, or we want to go visit the grandkids and they're not just a mile down the road, they're a flight away and therefore it costs more. Those sorts of things. Like those all play into what your lifestyle is, but then on top of that, you've got to figure out your health insurance, you've got to figure out your debt service, that sort of stuff. So what's your situation when it comes to spending, and how does that fit with drawing, $2,500 or $3,000 a month of interest off of the $1 million? And then of course with this, you've got to right now play chicken with inflation. Now to me, I think if you're doing your long-term projection, your long-term forecast for what inflation is going to be, I think you still use 3%-ish, something like that. I don't think you assume, well, it's going to be 5% for your entire retirement. I don't think so, based on the technological age that we're in, that's deflationary, and the fact that we have so much debt out there, there's no way our economy can really operate at these high levels of inflation and interest rates for a long period of time. So I think that will get it, there's lots of reasons to get it under control. However, if you're just living off the interest off of a portfolio, that means in spikes of inflation, you're going to see your purchasing power eroded, and those are going to be times we're going to need to tighten the belt. And then the last obstacle or key decision that you're going to need to make that really plays into whether, if you've saved up this $1 million, whether you can really afford to just live off of the interest, is what decision did you make with Social Security? What decision did you make with Social Security? Lots of times, and I've done some videos on this, people and financial advisors are just quick to say, draw it as soon as possible, draw it as soon as possible. I think it's because they want to tell you what you want to hear, and we all want to hear, I want to draw that money as soon as possible. As soon as I turn 62, I'm going to retire and turn on my Social Security. Well, you're locking in a lower benefit. And if you've locked in a lower benefit, so let's say your Social Security is $1,700, your spouse's Social Security is $1,200, and you've got $2,500 of withdrawal from interest off of your $1 million, is that enough? Just over $6,000, and then minus taxes, and then minus debt, and then is that enough for you to live? A lot of people, especially in the Midwest and not in high populated areas, yeah, that can work. Some people it can't. And so you've got to look at all of that, and what you chose for Social Security, how you optimize Social Security, that's going to play into that. If instead you've worked a few more years and you've let Social Security continue to grow, and you draw your Social Security at say 66, and it's $3,000 for you and $1,500 for your spouse, now you're at Social Security of $4,500. You're adding on your income, your withdrawal, the interest off the $1 million, and maybe that's more sustainable for you. But that obviously, your decision with Social Security is going to play a big role in whether you can live off just the interest from your $1 million portfolio. All right, so there's some context. There's how much interest you could draw, and those are some of the big obstacles. I'll go back to where I started, and that is, in order to determine whether this can work for you, it's not just what's interest rates and you know, do I think that this can work? Now you've got to build out the 5 factors, the full 5 factors to determine, do you have enough confidence in taking this approach that you're not, that it's going to work, that you're not going to run out of money and you're going to be able to live the retirement that you want. So you've got to work with your CFP to build out that 5-factor retirement plan. If you don't have a CFP on your team, contact one on my team. Find us online, korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.